take care of that issue. All right, what do we got? What do we got? Farmer. Zilvillistic. Zilvillistic. That's a weird name. All right. I'll give you that one. All right, who do we got? Ladies, can you grab the camera for a Lamar edit? I'm not quite sure what you mean there, but okay. Papa G's in the house. Luigi, how are you today? All right. That's rolling. That's rolling. Okay. Volume looks good. Richard, how you doing? All right, what do we have over here? Uh-oh. That didn't work out right. All right, who do we got? Crazy Life. Kingfisher. EK. Lamar. Patrick. Gene. Pat Dan Mac. Pat Dan Mac. Okay. Damon. Jayak. Easy Living. How are you? Hater? Oh, Hater. Hater the Heb. Wampa. Good evening again. Debbie. How Living wants to take a look at Kinder Morgan. Is that KDP, I think? Is that right? Kinder Morgan? Well, let's check it out. KDP. Bunch Jacob. Jacob Bunch. How you doing, Jacob Bunch? Jessica, how you doing? Tony Moss. Tony Moss. All right. Daiquiris. Good evening, everyone. My name is James, and this is Dividend Stock Talk, brought to you by the 10-Minute Trader per week. Now, 1% a week is over 50% per year. It's not that difficult. Created for a 9-year-old. Hey, what's happening? And it not be traced. You can't. Okay? It has to do with, what do you call that? Blockchain technology. So blockchain technology, basically, you're taking a block of data. Okay, ins, outs, all of the accounts. Okay, so each account number is tracked and it goes into a certain block. So it's like everybody agrees what it is. So this account gives money to them. I'm tracing it because the account you have has a certain number to it. Okay, so you may think it's anonymous, but there are ways of finding out who is and who's sending money to who. Okay. Are you on Instagram or TikTok in the morning? I'm on TikTok in the morning. I'm not on Instagram in the morning, only at night. Alrighty, alrighty. Because STZ is already up, so I might as well take a look at it. All right? So, Noodles, if you could do me a favor, fiduciaries, are you bonded? I have no idea what you're talking about. I'm not a fiduciary, and I'm not bonded, and I don't know why I would need to be bonded. Hey, wise words. Thank you for sharing that. David, good morning, good morning. All right, first one on the list. Now, I do everything, 1, 2, 3, 4, A, B, C, D, one at a time. And it's always the exact same. So let me quickly show you what I'm looking at. Okay? Now, anytime I look at a chart, I'm looking for 5 things. Just 5. Okay? Number 1, the high. Number 2, the low. Number 3, where was it a year ago? Number 4, where is it right now? And it take you 3 to 4 seconds to take a quick look at what the stock is doing. Basically, down, down, up, down, up. Do covered calls. They're simple, they're safe, they're predictable, they're easy. Okay? The stock doesn't even have to move at all, and I still know what my profit's going to be. All right? So, the 165, that's not good. Last trade was 166, but the new number is 166. Movement. Amador, you got a question there? Oh, I'll have to take a look at it. All right, so the 165 is going for 550. Well, that's a nice premium if you think about it. And that's for 2 days. Holy cow, that's a good number. Okay, Dom Authentic, what's up? Repent and believe. Oh my God, no, don't even. Falling in value. Okay, I'm not looking for high dividend stocks. Okay, I'm looking for the boring, because even though the yield may be 2, 3, 4% per year, I'm not looking at that. What I'm looking at is the premium on the option contracts that I get to sell against them. So if I buy a stock like Johnson and Johnson, AT&T, General Motors, IBM, something like that, okay, yeah, the yield for the year may be low, but I'm not looking for thing will come together in the end. What do we have over here? Jackson, how you doing? Jackson Paradise, how you doing? All right, what do we have? Edward, what stocks has Nancy Pelosi been buying and selling? No idea. I don't pay attention. Anyway, let's keep on looking. Do you like it? Do you even know what they do? Okay, but take a look at the numbers. The high of the year is like 265. Well, that's a big drop. So you're going to make most of your money in the stock market buying low and selling high. Well, at this moment in time, you're not going to get STZ any lower than the bottom of the year, which looks like it was last week. So let's take a deeper dive into it because we already know the numbers look good. So let's keep on going. So the high of the year for STZ was 264. The bottom of the year was 159 or 158.81. All right. So the last 30 days, right there, is what I'm mainly looking for. And the main reason I'm looking for the last 30 days to the upside. Well, on the third day, which would be tomorrow, would be a deciding factor whether or not I get in. Because I like 2 days to the upside from a bottom. Well, the bottom's right there. Okay? Yesterday was higher. Today was higher. Now, if tomorrow opens up above 166, well, I'm going to jump in. Because on a 30-day high, you got some profit taking, and it drops, gets down to a point where people like me say, holy cow, we got Constellation at 160. Absolutely, different companies every week. You got to remember, there's over 10,000 one Monday. Every Monday, we look to see how many different stocks are available. What are we looking at right now? Okay, that silver guy, we're looking at STZ. Okay, Sam, Thomas. Okay, yes, dogs. It's a different company every week. What are the advantages and disadvantages of preferred stocks versus common stocks? Well, preferred stocks, more than likely, we're not allowed to buy those because they're basically preferred. They go to certain investors, which we end up buying common stock. But you might have an opportunity to buy preferred stock. Okay, preferred stock, you actually have voting rights, where common stocks, you don't get voting rights. Cold drink, warm drink. The warm drink helps the throat. Cold drink soothes the thirst. Dips, you keep laughing at me, but just to buy a dip, you can't lose. Also, make sure this discussion before, okay? For somebody like you, perfectly good example, okay? If it works for you, great. Okay, Eileen, how are you, Miss Eileen? It might work for you, but you have to remember where you're right there. Great, now what do I do? Okay, you buy the dip, now where? See, I need cash flow on a weekly basis. When you're retired, you rely on someone else for your money to come in. Either Social Security, a pension, or punching a time clock. Okay, the money still has to come in. So what you're talking, buying the dips, great. So I buy the dip, great. Where's my income coming? You don't get income until you sell something. So just buying a dip, great, wonderful. It's a great advice. But at what point do you buy? Okay, so from up here, 180, she did. So while you're thinking about now what, let me finish what I'm looking at, because for me, it's been working for the past 15 years. Getting 50% of my portfolio as a return every single year. Give you an example. If I have 20 grand, 50% is 10 grand. If I have 50 grand, 50% is 25 grand. If I have 100,000, 50% is 50,000. If I have $1 million, 50% is 500,000. Whatever your portfolio is, half of that, well, is 1% per week. Okay? All righty, Eileen, I appreciate that. Thank you very much. I am a dog stock on TikTok, by the way. Oh, Collins. Got it. So, Collins, Why are you on two different? Yeah, you can do two different channels if you want. Nothing wrong with that, I suppose. Many people are on two different channels. So if you have any questions, you have you want to see something over again, well, just go to YouTube after we're done, the 10minutetrader.com, and then just watch the video over again. All right. Anyway, let's keep on going. Oh, so STZ. Yeah. Well, let's take a look at it. The 165s or the 160. Right, now, when I say I do covered calls, I use Think or Swim, which is through Charles Schwab. I am Legend. Hey, sir, please advise on Target and Emerson. Okay, Target and Emerson. Okay, I am Legend. Give me a minute or two. We'll take a look at those next. Okay, so on Think or Swim, as everything is preset. All I have out there that will teach you all of this stuff, I'm only doing this one. Because I think too much information is just not a good thing. You get what's called information overload. Okay, so we got a question over here, or is that just noise microphones? All right. So if you got a question, unmute yourself and just ask. Okay. MBM. Who wrote Does That Make Sense? For a reason? Paying attention. Good for you. White excellence. I have no idea what that means. Alrighty. Who do we have here? Hey, Pressure's in the house. Fendi's in the house. Charles Schwab. They haven't changed this trading platform in over 20 years, which I think is awesome. Because because I'm retired, why do I need to? No, I could if I wanted to, if it was interesting. But it's basically the same thing as it's been for the past 20 years. If it ain't broke, don't fix it. I think that's a great philosophy. All right, so I'm going to choose covered call because it's simple, it's safe, it's predictable, it's consistent. Stock is a very safe trading strategy. You actually can do it in your retirement account. Now, certainly, most of these strategies you cannot do in your IRA or your retirement account because the government considers them as too risky. But covered call, not risky at all. Okay, now, covered 65. Now, I only want to do one contract. Okay, so we all know if one contract, show you one contract, that way you have a good idea how many you can get. Sorry, here's what it looks like. Here's what it sounds like. I always tell people, read it out loud to make sure it makes sense. Buy one. Covered call, STZ, 100, which is the weeklies. 3 July 25. Now this is weird because we got 2 days left and it's still giving a huge premium. Huge against the STZ stock at the market to open to open. Now, I did not stutter. I did not repeat myself. To open means we're opening two orders. We're buying the stock. We're selling the option. That's two separate orders. Okay, the stocks go to New York. The options go to Chicago. Think of it that way. Simple, easy. 70. Now, remember when I said I want simple? Covered calls, one of the simplest strategies there is. Safe. It is so safe they say you can do it in your IRA. Ooh, I like that. Safe, so safe they say you can do it right in your IRA. Predictable. I already know what my profit's going to be before I do anything. Now, if you buy a stock, well, you got to wait for it to move before you can sell it, before you know what your profit is. That doesn't work for me. I'm a little weird. I don't know. What do you want to say? I know what my profit's going to be before I even do the trade. Well, that way I can make sure consistent. Sorry, simple, safe, predictable, and consistent. Well, I say I only want to do weekly options. Well, because a weekly option, I can do it every single week. So this week here, if I'm going to buy STZ tomorrow, I can sell it to somebody else for almost the exact same price I just paid for it. Well, whoever buys that option doesn't buy the stock for me by the end of the day on Thursday, because there's no trading this Friday because of the holiday. Okay? If he or she doesn't buy it by Thursday, I still get to keep this money. And then next Monday, I get to sell it to somebody else. I think that's freaking awesome. Every single Friday. Monday. however you want to look at it. Okay, so that being said, I'm looking at it in a totally different way. Okay, now I've been doing it for a while, but recently there's been a wave through the internet, something about cash producing assets. All right, fine. Well, people buying cars and renting them out. People buying houses and renting them out as a B&B or just like a Verbo or just a regular rental. Okay, a cash producing asset. That's where you put a big chunk of money up front, and then every month or every quarter or whatever, you get a return on that money. Or somebody pays you. Nowadays it's 400 grand. Well, 400 grand is the average price. Okay, great. So if you buy a house, 400 grand, well, the average $100,000 investment, some people might think, hey, that's great. That's 7 or 8% per year. Look at it this way. If I took that $400,000 and I bought me a cash producing asset such as STZ, 400,000 amount of money, 400,000 into STZ, 1% a week, well, that's $4,000 a week. That's 16 a week. No, sometimes I'll get 4,000 cash on a weekly basis. So whatever you do with your money is totally up to you. Okay, this works for me, and this is what I'm going to do. Let's take a look at the rate of return for STZ. One contract is going to give me $570 a week, or this week. Stocks go down, it directly affects how much we're going to get on a weekly basis. Okay, fine. 564 is costing me $1,600, so let's do some quick math for that. Let's get my money machine calculator. I'm not going to come up with a different name. Okay, 564. And then we take the profit, 564, and we divide it by what my investment is going to be. So my investment, 15,936. 0.5%. 3.5. Do you have any idea every single week is? It's got to be over 100. This by 52. 180. Damn it, I was close. I don't know, was I close? Got a question. I know you hold a stock for 1% to 2%, but do you ever hold it past 2%? And if so, what is the strategy you go by? Okay, Matt, that's a good question. There are lots of strategies, Matt. Literally, lots of strategies. Let me show you some of them. Hold on. Let's get this out of here. Let's get this out of here. Let's get single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, collar, synthetic, butterfly, condor, iron condor, vertical collar with a stock, double diagonal, unbalanced, and then there's deep and wide. There's a whole bunch of strategies that you can do. Now, I only give away one for free. Okay? Eileen, thank you for that. But if you could do me a favor, Eileen, just do it once. Okay? Just upload it once. I can see it here. Fine. But Eileen, I see what you wrote. You don't have to write it 10 to 15 times. Once is perfectly fine. But thank you, though. Yeah, have a great day, Miss Eileen. All right, so that being said, all these different strategies, which one do you want to do? Well, if you remember, now some of you knew, some of you have never been here before. The trading strategy that I'm giving to you for free, I'm not charging anything for it. I will answer whatever questions you have directly related to the one trading strategy that I'm giving away for free. Carl, she's going to be 26 in a couple of weeks. Holy shit. I'm not ready to have a 26-year-old daughter, which is kind of like that much. I to sell you something here, unless somebody specifically asks. Okay, so if someone asks, yeah, I will tell you about it, but I'm not going to go into a deep pitch. You're not going to hear me pitching anything. We're all adults. We all know how it works. Yes, I've written a bunch of books. Yes, I have a study course. Yes, I have an online paid trading group that you can actually watch me trade and ask me hundreds of questions. I have all that. Okay, we're all adults. We know how it works. I'm not going to try to sell anything to anybody. I will answer your questions. I'll show you everything I do to get what I get. And I also post all my trades online in 3 accounts. I got 7. Oh, yeah, Joy. Hemant, evening. Lexus, good evening. Charlie, Adam, Eagle. What strike price would you sell on STZ? These numbers are going to change 9:30 tomorrow morning. Because when the market opens, it's like a rush, not rush roulette. Okay? So, STZ. Next one on the list was Apple. Someone want to take a look at Apple. Okay, STD doesn't have a long history of dividends. You still like it. Okay, world you want to live in, girl. I did not say it was one of my stocks. Okay, I just opened it up because somebody wanted to take a look at it. You will see me looking at stocks that I personally will not buy, but I'll take a look at it and I'll tell you I wouldn't buy it, depending on what everything looks like. Make sense? Okay, I am late. TGT. Interesting. Ooh, look at that. Now, it should take you 3, is up, down, up, down, up. Okay, not that difficult. 3 to 4 seconds. That's all it should take you. Once it will give me as a return on my investment. Okay, it's at 104. The last trade was, that's tomorrow and Thursday. Well, let's not do that. Let's do next week. That gives us a little bit more time, and a little bit more time means a little bit more money. So the 104s for now, now we know 2% a week is over, but it is going to take a little bit of time. You do have to weed and water your garden, so to speak, okay? If you have a dog, you got to feed it, and you got to walk it, and you got to clean up after it, okay? Why not treat your money with the same respect? It's just barbecue than they do with their personal finances. Well, I tell you what, your personal finances are going to be more important when you're retired than that family barbecue was. Because family barbecue is going to come and go. The money, for me, has to last me the rest of my life. Get out of the house, find something to do. After I got like a list of 37 projects in my house. 37 projects. And it's like every time I come up with a neat idea, she says, no, you have enough projects. Get them finished first. I said, well, I can tell you exactly the one. All right. What do we have now? This. All right. Still haven't reversed the background so viewers can read it. Mr. J, okay? Like, hold on a second. Mr. J, yeah, know the answer, okay? Now, YouTube, as far as I know, okay, doesn't have a little, it reads normally. YouTube doesn't have the capabilities to do that. So until it does, we're stuck the way it is, okay? Now, I don't pretend to be technologically advanced, because I'm not. Funny story. This is a funny story. I bumped into to Steven Tyler one day, and hands it to his daughter. He says, yeah, I can't figure these damn things out, and I'm technologically retarded. It's kind of funny, because where I come from, because he actually comes from my hometown. And you can just bump into him on the street, and it's like, everybody leaves him alone. It's just Steven, the guy is he's an icon, right? So you think there's always a crowd around him, but no, not in his hometown. In his hometown, he's just Steven. All right, anyway, so we're taking a look at Target. High, low, is. Look at the motion. Up, down, up, down, up. All right, so it's at 103 right now. The 104s look pretty appetizing. But here's the thing with Target. Target is one of the few companies that have what's called a black swan. Target during earnings reports and during dividends. Because this is what happens. You see this? Let me zoom into it so you get a better look at it. Okay. You see that? 156. Very next day, it drops all the way down to 120. That's called a black swan. A black swan is one of those things that happens once in a blue moon because you don't see it very often. However, Target does it at least 2 or 3 times a year. What was that? All right, I got some noise in the background. Who is that? Ruben. All right. Ruben had a little bit of noise in his background. All right, so you got to be leery with Target. And there's a few others that do this, but Target is notorious for doing this. As a matter of fact, I lost something at 102. Then it jumps up to one, I forget what it did. It was like 2 or 3 years ago. But I did, overnight. Woke up in the morning, it's like, oh! Here, where are we? Last 30 days, right there. Okay, so take a look at Target. 30 days ago, we're at 93. Then we dropped down to 92. Shoot up to 102, drop back down to 94. Now we're at 104. Okay, look at the nice upward trend. Great. Well, where is the dividend? Because I want to stay away from the dividend and I want to stay away from the earnings report. So let's put it right here. TGT. Okay, dividends and earnings. Not in July at all. Not in June. Here's the dividend. Here's the earnings. June, July, August. All right, so not going to have a dividend or an earnings until sometime in August. Great. That means it's an opportunity for us to take advantage of. All right, let's get out of this. All right. So we're not going to see the earnings or the dividend for Target for at least 4, 5, 6 weeks. So it's not a big risk at the moment. So let's take a closer look. So we like the 104. Well, let's backtrack a little bit. Okay. Here we are in January at 145. She drops down to here to right around 85. And it's a slow upward. But I'm looking at the 30-day chart. Now, long-term play, yeah, fine. Now, I don't do things long-term. I go for... Okay, here's your 30 days. Here's your bottom, jumped up, pulled back, now it's going up again. It's a little too high for me. It's at 30. Thank you, World You Want to Live In Girl. Okay, World You Want to Live In Girl, can you come up with a shorter name? Betsy? I like Mikey G. Riley. All right. Now, we're going to do Apple, too. Somebody asked me about that. Now, Riley is one of those ones you only good for the, what do you call that? diehard investor. I think so. All right, anyway, so we're up here at 22 a year ago. Now we're down at 321. Can you imagine that? 22. Now we're at 321. The bottom of the year is 276 or 267. Can you imagine that? 22 down to 267. What is that, like a 95% drop? Well, why the hell would anyone buy it at a 95% drop? Well, I did. I bought it. I know stocks don't go sideways because they go up and they go down. That's about it. But it looks like it's channeling. That's what it's called when it's going, looks like it's sideways, but it's actually called channeling between 290 and 6. Okay? So let's take a deeper dive into it. D. Hurst, I need to flip 5,000 to 10,000. What can I do? You probably should go someplace else because you're definitely in the wrong place if you're looking to double your money. Okay, unless you want to double it in 2, 3, 4 years. Okay. That being said, let's zoom into this one a little bit closer. The last 30 days, right there. Check it out. This is the last 30 days. 30 days ago, we're just above $3. And then we dropped all the way down to 267. Okay? And then we jumped. Well, I honestly really don't care because I bought it at 297. Look what it's been doing for the past couple of weeks. 1 week, 2 weeks, 3 weeks, 4 weeks, 5. But Riley is one of those stocks you cannot do margin. It has to be all cash. Well, I have margin accounts. Riley in skating on the edge, kind of like Mikey G and a few others. So I don't mind Riley. It is risky. They don't have the dividends. And we said the 350s right there. One contract. there at the market. Here we go. And here we go. Buy one covered call of Riley 100. That's the weeklies. 11 July 25. That's not this Friday. That is next Friday, which means the option's going to expire on Friday. $3.50 call option against the Riley stock at the market to open. We've heard that before. 2 orders, buying stock, selling the option. What are we collecting? $40.50. Well, that's kind of crappy, isn't it? But we're only paying $310 per contract. Well, $310 is not bad. If you think of, if you're looking for a cheap stock to get into, $310 for. Think of it this way, right? You're creating a weekly cash flowing asset. And this asset is going to cost you $310. And you can sell this option against this asset to bring in cash flow every 7 days or every week. All right, so let's see what the numbers look like with my calculator. $40.50. That's the profit. And fees, $310.16. Well, let's see what it looks like. Divide 310, 16, grand total of. That can't possibly be right. 13% for 1 week? Think about it, 13%. But you gotta like that stock, Riley. Now, more than likely, Riley's not gonna hit. Hold on. Do you trade at the beginning, end of quarter? Why not? Don't care. Every single Monday, I'm buying something different. Every single Monday, I am selling a covered call on every single dividend stock, and that is that doesn't have options on it. And that was something I inherited from someone else. So that's crazy. 13% for 1 week. But it's normally not going to hit. What are we calling? Where are we? It's probably not going to hit 350. Okay? Because the bottom is right here, 276. And we jumped up to 330. More than likely, this is going to be profit taking. This thing's going to come back down again. Normally, probably. Is it ever going to hit 350? Probably not. But do you like it enough to buy it and create a cash flow every single week? It's a cheap one, $3. That $310 to buy one contract. I mean, to do one contract. Still covered calls. Does it have to be in 100 shares if the stock for one option? Yes. One. Matt Evans, am I a millionaire? It depends on how you're adding it up, Matt. Okay? So what are you counting? You know what I mean?
If you were to do the three tens, you'd be at 4.3%.
They don't have a 310. They have 3s and 350s. Nope. 152, 253, 354, 455.
The threes would be 4.3.
Would it really?
Yeah.
Okay. Well, let's give it a try. Do the 3s. But wait a second. Hold on. Okay, the current price is 336. The 3s are going for 226. So that's $1.90 you're walking away with. Well, that's not bad at all. $1.90 per. That can't be right. $1.90 per share on a 13. I think I got 9 cents this morning. 9 cents. Look what they're offering now. Yeah, that's crazy. Anyway, next. I have 10 covered puts on TSLA right now. Bodie, I have no idea why you would do that. Matt Evans, hell yeah. You rich poor people don't tap. their TV like that. Really? I can do whatever I want. I got like 5 of them in here. Wait, 1, 2, 3, 4. All right, so I only got 4 of them in here. 2 in the other room. Matt, another question. I have been trying to understand the best time to enter a stock. Don't know what to tell you. Okay? So, basically, Matt, to buy a stock, it's very simple. You put your cursor there. Okay? It pops up right here. You hit confirm and send. Like that. Here comes the order will fill. You have to... I don't know how to answer that question, because in order to trade, you need a trading platform. You need to open up a brokerage account somewhere. Robinhood, Acorn, Webull, Charles Schwab, Fidelity, whatever trading account you want to do. And then you have to fund it. And when you do that, all you do is just press buy and send. And it automatically goes to the broker. They fill it and they say, hey, you're the proud owner of 500 bouncing baby Rileys. Or whatever you want to buy. Okay, buying a stock is easier now than it was when I first started. Could you share a brief story of how you got into trading? Uh-oh. OB. All right. Brief story how I got into trading. You might not like it, and not many people do like it. Okay? When I got out of high school, I joined the service. Okay? Served my country. Got out of the service, and then I joined as an apprentice to a gentleman who built exhibits for museums and public aquariums. So if you ever go to a public aquarium or a public museum, okay, those exhibits you see there, yeah, people like me built those. Okay, so at one point, he signed a contract with a big manufacturing company, and he moved his operation to the Philippines with his new Filipino wife. He left, and he didn't take anything from the shop. He just said, throw it out. So I said, okay, fine. You're leaving the country, so I took all the stuff he was going to throw out. I took it, moved to Florida, and I started my own business. Not selling to museums and aquariums. Well, I did sell to museums and aquariums, but I also sold to the general public, because after a certain size, okay, 'cause I did aquariums basically. After a certain size aquarium, the most common one was a 55 gallons, 48 inches long, 19 inches tall, and 13 inches deep. What are you going to put into that thing? You're limited. So I started creating these pieces of art, and then I used to reproduce them. Latex molds, silicone molds, and there was nobody else making artificial coral for the home hobbyist. I was the first one to do it. Okay, and this was like 30 years ago or something like that. 30, 35 years ago. But anyway, I was the first one to do it. I literally went door to door to all the big pet stores in the area. So I would go to a pet store, and the guy to my friend Mark in Tampa. So Mark in Tampa says, I'll take everything you got. So after about 2 or 3 truckloads, he says, hold on a second, I can't take any more. Let me introduce you to my friend Mike in Lakeland. Okay, so the deal I had with all these pet stores was, if you bought X amount from me on a monthly basis, I wouldn't. This town, you had to go to this guy. This town, you had to go to this guy. So after a while, I got a call from someone down in Miami. He said, I'll tell you what, I want all of Broward County, and I want all of Dade County. I said, well, great. It's going to be Echo. I started investing. Okay? Real estate, antiques, collectibles, and then finally the stock market. Well, if you know anything about real estate, collectibles, and art, and all that kind of stuff, well, it takes a little bit of time and effort. No OSHA, no regulations. And then in 2008, when my daughter says, Daddy, what are you doing? Can you teach me? Can you teach? A 9-year-old little girl says, Daddy, can you teach me? Okay, so teaching a 9-year-old, it had to be simple, safe, predictable, consistent, and no way for her to lose. No. What do I mean by the list? I only invest in companies that have at least 2 decades of profitability. That's it. If it's okay, so rule 1, if it's not on the list, it's no. Rule 2, never sell at a loss. Rule 3, now for a 9-year-old, it took 15 minutes to explain it to her. I said, honey, okay, hold on, let me show you this so you understand it. Okay. Now, every single dot, every single green, okay, so if it's on the list, it's a yes. So this week, these are the only stocks I want to look at. Next week, these are the only stocks I want to look at. The week after, that's it. Okay? The first week, that's May. I don't want to look at May. Okay? First week of July, this is all I want to look at. That's it. Second week of July, that's all I want to look at. That's it. If it's not on the list, no. Okay, so for the first week of July, I don't want to look at this one. I don't want to look at that one. I don't want to look at that one. Just the ones on the list. That's it. So for a 9-year-old, Dividend Kings, Dividend Aristocrats, Dividend Champions. Okay, this is only 25 years of increased profits. It doesn't take care of the contenders. It doesn't take care of Warren Buffett's list. And it doesn't take care of the king. Right. If it's not on the list, lovely. Okay? And it's always the same. Every single stock I look at. Where's the high? Where's the low? Where was it? Where is it? And where is it going? Down, sideways. That's it. Okay, let's zoom in. High, low, where was it? Where is it? Now, by looking at the chart here, it gives you a good idea of where it's going next. Well, most likely with a big jump like that, most likely difficult. It's like a river. Follow the flow. Okay? The motion of the ocean. What do you think is going to happen next? It's logic. Okay? What do you think is happening next? So for a 9-year-old, it was relatively simple. Now it's called the 10 predictable, consistent, and no way for her to lose. That was it. Okay? That's the story. And it worked so well, I said, the hell with everything that I'm doing. I'm just going to do this. Because 10 minutes a day is less than 1 hour a week. Oh, we don't want to see that one. Okay? So, remember I said I have 7 accounts and I share 3 of them publicly. Account 1, account 2, account 3. The beginning of the year, 151. Beginning of the year, 143. Beginning of the year, 114. So think about it. What's 1%? $100 an hour. Just to maintain that account. $1,500 an hour. Then you get this account, 143. Well, that's $1,400. Account 3, 114. Well, that's $1,100 for 1 hour. Now, I got 2 criteria and only 2. 1, consistency of profitability. 2, weekly options. That's it. Be the question. And number 2, what strategy are you using? Are you just buying the stock, waiting for it to go up? So I look at the trade, I do the numbers. Is it going to work? Is it what I'm looking for? Is it going the right direction? It's not that difficult. And then it went up, then it came down. It's a numbers game. Okay, a $3 stock. Okay, this morning it was at $2.92. Then it nothing. But $1.10 on a $3 stock. This morning it was at $3. $1.10 move on a $3 stock is over 30% move in one day. 30% move, yeah, there's going to be profit taken tomorrow, more than likely, unless there's something going on that I don't know. But me, I personally, and if it got close to the 3, I'd roll it into the next week and pick up another 1, 2, or 3%. So this week, this morning, I rolled it into next week and picked up 9 cents. Now, I know 9 cents doesn't sound like a lot, but 9 cents on a $3 stock is 3%. Add it up. 3% a week, 52 weeks in a year, that's over 150% return on a $3 stock. Okay, that's not a lot of money. Okay, 150%, what is that? $4.50? It's not a lot. But multiply that by 15,000 shares. Then it adds up. Okay, every single position I have has a covered call every 7 days. I'm creating a cash, whatever it is, or 9 cents. It adds up. What does weekly options mean? Annie, how are you today? An option, Annie, means I have the right to do something, but not the obligation. It's kind of like cutting in line at the movies. You're just holding the place. How about this Volkswagen Bug? Okay, maybe it's worth $1,200. You push it out in the front yard, slap a for sale sign at $1,200. Come get it. Okay, it is a non-refundable deposit. So if Friday comes, Pete shows up, he gives you the $1,500 for the car, over and above the $100 he already gave you. So you're actually making $1,600. Okay, it's a nice little profit. Well, what if he doesn't show? It's Tom down the street, and Tom gives you $100. Hey, hold it to me till Friday. So you got $100 from Pete, $100 from Tom. If he comes back on Friday and takes the car, well, you got 100 here, 100 there, and you got the $1,500 for the car. An option is just the right day until Friday. Okay? So if I sell an option on Monday, Friday afternoon at 3:59 p.m., your time is up if you do it or don't do it. Okay? You buy it, don't buy it. Totally up to you. It's not obligatory. Okay? It means you don't have to buy it if you don't want to. That's a call option. And it's a weekly call option, which means what we are doing, we're buying the stock at a certain price, and then we're turning around and selling it to someone else at a certain price. So let's say, hypothetically speaking, I buy this stock at $3, and then I turn around and I sell it to Pete for $3. He's going to give me 9 cents a share. Well, however many shares I get. If I have 100 shares, that's only $9. Okay, but if I have 100,000 shares, that's $900. Okay, all it is just another way of making money. Now, I can make money for this regardless if the stock moves, because when the option expires on Friday, well, it's going to depending on where the stock price is at the moment. Because as you can see, the stock price goes up, it goes down, it goes up, it goes down, it goes up, it goes down. So as the stock price goes up, and the stock price goes down, so does the value of the option. So as the stock goes up, the value of the option goes up. As the stock goes down, the value of the option goes down. So what I'm looking to do is buying the stock, $3, selling it to someone else for $3 between Monday and Friday. Whoever buys that option from me, that weekly option, they have until Friday, 3:59 p.m. to decide if they want to take it or not. Regardless if they do it or not, I still get paid the premium. And that premium is, whoops, not there. That premium is right here. So I can collect that every single week. I hope that makes sense. All right. I got questions over here. Thank you for everything. Yeah, you're welcome. Stephen Ashmore. Hems does not have 20 years history. Would you buy it? Nope. So aristocrats only? No. I like aristocrats, kings, contenders, champions. Did Philip Morris ever meet your criteria? Yeah, every once in a while. Stock Banger 23. So you hold the shares and sell covered calls. What does the covered call pay you? Over 1% every single week. So Stock Banger, 1% every single week is 50% per year or more. And then I have no idea what that means. All right, cool beans. What do we have over here? Oh, Annie, you like that? You're welcome. All right. Bodie. Selling options that expire within a week, you sell them. All right, thank you, Bodie. MBM. What do you tell people who can't be glued to the screen all day or sit in front of the computer? So I do all my stock trading within the first half hour of the day. I'm in, I'm out. What is this $3 stock? 86. How are you doing today? This is Riley. Okay, I got to go backwards. I missed a whole bunch of questions over here. It's always someone asking about taxes. Okay, hold on. Okay, right about here. I'm going to stop right there. Excellent question. There we go. Well, Boogeyman had a question. I missed it. Where was it? Nope, missing that one. Okay, stop right there. Oops, right there. Okay. I trade option contracts and want to move every single week. But here's the thing. I'm only on my computer doing my own account for 5 or 10 minutes a day. That's it. 5 or 10 minutes a day, which is about 1 hour a week to make 1%. Well, if you have a small account, it's a pain in the butt because you have to get to a certain point where it actually becomes really profitable. So if you're starting out with 10,000 or 5,000, it's going to take you a while to get to a point where it's actually worth it. Because at a $5,000 account, 1% is only $50. Well, you're spending an IROD. Actually, you have to be approved for options. Now on Thinkorswim, if you're not approved for options, they won't show up. Thank you so much, Stephen Ashmore. I agree with you. Now, I don't know if you guys remember dial-up modems. Well, we had to pay by the minute. Literally, when I first started trading, okay, you want to hear something shitty? When I first started trading, we had to pay per minute to be online. That's number one. Number two, we had dial-up modem. So if somebody somewhere in the house picked up the phone, yeah, then you got disconnected. Then you had to do the whole thing over again. And then to make matters worse, it was $250 to. So can you imagine it? $125 to enter a position and $125 to exit a position. Well, then I was excited when it dropped down to 90, and then it dropped to 80, then it dropped to 75, then it dropped to 50, then it dropped to 40, to 30, to 29, to 15. Now it's almost free. Okay, so I've been doing this for a long time. Income property is expensive to maintain. Insurance costs, skyrocketing, maintenance costs, absolutely. Okay, get a tax guy. No, I say, okay, stock banger, don't get a tax guy. Get a tax strategist. Okay, a tax guy will just tell you, all right, this is what you're paying in taxes this year. No. A tax strategist will say, all right, if we do this, this, and this, you don't have to pay any taxes. That guy I like. All right. Eminem, what do you tell people? All right, yeah, I already did that one. Bodie, by the way, you can close an option well before the expiration date. Take the profit if it is there green for you. Not necessarily, Bodie, because everybody says that. Well, the stock's going up. Can't make sense. Okay? Now at $3.30, it's 30 cents. So it went from 9 cents to 30 cents. It tripled. Okay? The stock went from $3 to $3.30. The option went from 9 cents to 30 cents. Okay? So options, yeah, you cannot buy the option back, sell the stock, and expect to get a profit. Because the option goes up as the stocks go up. It doesn't work that way. When you sell a covered call, you better be happy with the premium you collect. Because if the stock jumps, someone else is getting that profit, not you. And you have to be okay with that. All right, Grim Ghostwriter. I don't do long term. Just don't do it. Probably up. Thank you. Okay, cool. Compound interest. Uh-oh. Stock banger. Have I got something for you? Hold that thought for 1 second. Now, you want to talk about compound interest? You're going to love this. Now, stock banger. This didn't exist before, so I actually had to create it 20 years ago. This is what's called a weekly compound interest calculator. What it does, basically, you come up with a number you start out with. Then the calculator allows you to put in periodic deposits. So let's say hypothetically you start out with $1,000, and every week you want to put in, let's say, $50. Okay? And then what kind of rate of return are you getting on a weekly basis or a monthly basis? Okay, hold on. Hold on. Okay, now I teach weekly, so we're doing weekly basis. Now I do have a monthly compound interest calculator also, so it compounds it on a monthly basis. But the weekly, you're gonna love this. Watch this. So if we start out with $1,000, put in $50 a week, okay, at 1%. All right, now I can compound it at yearly or monthly. Let's do yearly, okay? Now let's go for just 10 years. 10 years, all right? Now, does anybody want to venture a guess what $1,000, starting out with $1,000, $10 a week, compounded at 1% per week over 10 years? What do you think? Anyone? Okay, I wonder if anyone come up with a number. Joey, KB, what's happening? And I'm going to go all the way to the bottom. Anybody come up with the answer? Anyone? No one? Nobody has an answer? Oh, Stockbanger says 1 mil. That's it? You just think 1 mil? Nobody else? Nobody else wants to venture a chat? Luke says 50 grand. Anybody else want to venture a guess? Guess? Anyone? Starting out with $1,000, $10 a week, compounded 1% per week for 10 years. You look like Joe Glass. Oh, Luke says 500 grand. User 61111881111, whatever, so 1.7 mil. Okay. Can I access your community and course on the website? Yes, you can, dogs. Stockbanger says 1 mil. Nobody else gonna get? Uh-oh. 120,000. Are you shitting me? Really? We got 80 grand. We got 13 grand. We got 10 million. All right, you ready? Here we go. Okay, 900, 4,900, 54,000, 54,000. So 1,054,000. Lukey. Raul said 10 mil. So who said 1 mil? 1 mil was the closest. Yeah, Stockbanger was the closest. But think about it. 1,054,000. That's the beauty of compound interest. All right, so let's get out of that one. But there's also, what is it? Right there. You want to start with, you can deposit whatever you want on a weekly basis, monthly basis, bi-weekly basis. Yep. Harry for good. The eighth wonder of the world. Who said that? That was Einstein. Compound interest is the eighth wonder of where you're going to be if you have to keep changing the calculations all the time. So let's get back to where we were. All right. I just started day trading Monday, and I started on Robinhood. Is it a good platform to start on? No, I love Robinhood. I don't day trade, but if it works for you, great. You have one, it works. Cool beans. Okay. Cool. Okay, what do we have here? All right. That was a wonderful explanation. You're welcome. Bondi, Fidelity, Vanguard. Yep, got that. MBM, you'll get market price. Okay. All right. Joshua, how are you? Good. I've seen this guy in the YouTube ad. Yeah, you didn't see me in the YouTube ad. I don't have any ads. He said he's teaching for free, and yet does subscribing to the channel really cost nothing. Okay, so MBM, you did not see me in an ad. I do not have any ads. Okay, Moo Cow, James, Riley, not closed in case it did not close early, roll, blah, 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 to let it expire, blah, blah, blah. It's, okay, not a question, more of a statement. All right. Isn't it true that 99% of day traders lose money and do not outperform the S&P 500 if they happen to not be negative? I honestly don't know if it's 99%, but a large majority of traders, especially day traders, yeah. Can we look at Abbott Labs? Ooh. All right, well, let's take a look at Abbott Labs. ABT. ABT. Oh, where was it? Where is it? Look at the motion. Up, down, up, down, up. Okay, great. What does it look like? Well, it's at 136. What's the 136 is going for? 172. Well, that works. All right, so let's take a close look at the chart. All right, a year ago we're at 104. The bottom of the year, 99.71. That was back in late July. The high of the year, right there. All right, the beginning of March at 141.23. Okay, finds a bottom on there, shoots up. Look at the last 30 days. Last 30, right there. Okay, so here's your last 30 days for Abbott Labs. High, low is, look at this, up, down, up. Here's your bottom here, 1 day, 2 day, day number 3 to the upside. That would be my entry. Okay, 2 days up. On the 3rd day, that's where I jump in. Now, 136, 172. Okay, see, the 136 call strike is selling for 172 per share. All right, so let's see what that looks. It's a coverage call. And let's do the 138. Did I say 138s? No, 137s. 137s. Okay, one contract. And next Friday, 137 call option against the Abbott stock at the market to open. To open, maximum profit 213. The investment's going to be 13 G's. All right, let's see what those numbers look like. 213. And we're going to divide that by the investment, 487. 487 gives me a grand total of 1.57. That's a point and a half. Okay, that's over 80% per year. Okay, 1.5% per week is going to be like Abbott Labs at this current price. Are you willing to buy it, hold on to it, and just never sell it and keep doing? Why would you do poor man's covered call? I wouldn't. Because a poor man's covered call, you got 2 options, and both of them are going to expire. And as the stock moves up and down, well, you can't always get a good fill on the option price. All right, Frito. All right, Tiny Coco. Could you look at Abbott Labs? We just did that. Luke, 50 grand, blah, blah, blah. I have no idea who Joey Gladstone is. What the question? 13 grand, maybe 500. In what equity or fund are you comparing this with? Okay, Max, see, I'm not comparing this with any equity or fund. Okay, I'm just talking about compound interest in the basic sense of what compound interest is. Earns it, doesn't pay it. Okay, pays. What's the most money you've made in a day? A big fat chunk. Good evening, sub. Why is that sign backwards? It's signed, looks perfectly fine to me. It does. It looks perfectly fine to me. I think it's your computer or your, what do you call it? Okay, Gorius, we'll take that question in a minute. How come you don't consider some other data about the company's or consumers' mood than just the up down of the past? Ooh, that's a good, actually that is a good question. Let me see if I can explain it to you in a manner in which you'll understand. All right? Let's get out of that. Let's get out of that. Let's get out of this. Let's turn this back to this. And let's go back to here. And let's go back to here. All right. Now. All right. Who asked that question? MBM. How come I don't consider any other data? Well, let me see if I can explain this to you in a manner in which you'll understand. Okay? Adults have a tendency to make this more complicated than it needs to be. Okay? Do you understand that? Adults. That means people over a certain age have a tendency to make this more complicated than it needs to be. All right? So, let's look at the numbers. Because I'm a numbers guy. 1 plus 1 is going to equal 2 no matter where you go. All right? Now, we are all here with one goal in mind. To make money. Correct? What strategy are you going to use to make your money? I told you what I'm going to use, the covered call. All right? It's simple, it's easy, it's predictable, it's consistent. And the stocks I'm using, boring blue chip stocks. They've been in business for, but the premiums are lovely. That's what I'm looking for. Do you trade vertical spreads? The list. Are you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Go to Google, in the Google search, Dividend Kings list 2025. Dividend Aristocrats list 2025. Okay, so I think 9 channels. So I have a lot of questions to go through. So I'm trying to get to all the questions. I'm trying to look at some stocks too. Okay, but I got a question here. Okay, how come I do not consider? Okay, let me explain to you why I honestly don't care about anything else. Okay, we're all here looking for the same thing, to make money. Well, how do we know? Well, stocks go up, stocks go down. That's it, right? Can we agree? Stocks go up, stocks go down. They don't come to your house, take the dog for a walk. They don't come to the house and rake the yard, mow the lawn, trim the hedges, and then take the trash out to the what do you call it, to the curb. They don't do that. Stocks go up, stocks go down. That's it. That's all. So let's take a look. Here's the bottom here, 131, 5% move. Okay? From 131 to the high 139, that's an $8 move. How much is that? Okay, stocks go up, profit taking, stocks come down. Stocks low, people buy it, stocks jump up. Stocks up here, profit taking, stocks come down. Okay? Then it gets down here, people like me say, oh, up, down, up, down, up, down. You can look at any stock you want. Any stock. Macy's. Okay? Down, up, down, up, down, up, down, up, down. You find a company you like, you zoom into it. Great. Where are we right here? Look. Down, it's at the bottom. Shoots up, goes from 14 to 15.75. That's $1.50. $1.50 on a $14 stock is a little over 10%. Stock goes up a little over 10%. What do you think is going to happen? Stock's going to go down. Profit taking. When it gets down to a certain point, it stops, it turns around. It's all mathematics. Okay? Stock goes up a certain percentage. You got people like me. I'm only looking for 1 or 2%. Okay? Okay, here, 14 bucks. What's 1% of 14 bucks? 14 cents. So it started out at 14.25. By the end of the day, it hit a high at 14.65. Well, that's more than 1% just in one day. If I'm looking for 1% every single week and I find the bottom, what usually happens at a bottom? Well, it consolidates and then it goes back up again. And then what happens at the top? Well, people start taking profits and then it drops. How far is it going to drop until people start saying, wait a second, this is a deal, let me buy some. And then it goes back up again. It's elementary. I don't have to look at anything else. Okay, number one, it doesn't make my list unless it's a good company, which means it's consistently profitable and it has at least weekly options and some good volume. This, I don't know what's the volume on this one. 14 million shares. So I don't look at all that other stuff. Because remember, the trading strategy I am giving you for free, that I'm showing you here, was specifically created for a 9-year-old little girl. Now, I haven't introduced her in a while, so let's bring her on down. Come on down. All right, so So where are we going? Right here. Right here. Let's go. Come on. Got to follow the bouncing ball to YouTube channel. All right. Going to the YouTube channel. Oh, wow. This getting a little slow. All right. Right there. All right. Videos. Okay, because we want to see the video. And we want to look at the oldest videos because there she is right there.
Hi, I'm JC, and you being part of my internet website company, which might not. Hi, I'm JC, and you being part of my internet website company, which might not be like all that I do. Being part of that, you're going to be getting weekly lists of stock knowledge training and every.
Now there's me, 15 years ago. That thing makes me laugh. Every time I see that video, I laugh. I do. I laugh because it's funny. Because 15 years ago, when my daughter was younger, I had to keep her entertained. It had to be fun. It had to be exciting. It had to be something a 9-year-old can understand. Stocks go up, stocks go down. What happens when it goes down? It finds a bottom, it turns around and goes back up again. What else do you need to know? And if we're doing covered calls, well, I buy it at a certain price. I sell it at the exact same price I bought it for. So I'm not even looking for it to go up. Stocks move 3 different directions. Okay? If it goes up, I make my money. If it stays the exact same, I still make my money. Sometimes, if I'm doing an in-the-money call option, the stock can even come down a little bit, and I'm still making my money. I'm not quite seeing why I need to look at anything else. Why do I need to make it more complicated to satisfy just a few people? Adults have a tendency to make it more complicated than it needs to be. Number 1, never pick a stock you don't understand or you don't want to hold on to. Number 2, never sell at a loss. Number 3, make sure the company's consistently profitable. Number 4, weekly options only. Number 5, make sure the numbers work. It was created for a 9-year-old. Why do you want to make it more complicated? You do what you do. If you want to look at other stuff, you want to look at the Delta, you want to look at the Vega, you want to look at the Row, you want to take a look at the, Black-Scholes SI index, you want to look at whatever you want to look at, fine. You do what you want to do. It's been working for me for 15 years. Look at all the here I have. No gray at all. That was 15 years ago. All right? I was doing it then when life was a lot more complicated. And I'm still doing and I'm saying the exact same things. All right, let's get out of there. All right. Hopefully that answers your question. Why do I want to make it more complicated? You make it complicated if you want to. Can you please let me know your opinion on vertical spreads? Nobody else knows what they are. I know exactly what vertical spreads are. Okay, they're awesome when they work. You got to remember, a vertical spread is 2 options. You're buying one, you're selling another. Them for years. I did. They were great. And I come to the conclusion that I just don't want to do them anymore because it's too much work. Okay, now, when they're profitable, they're awesome. When they're not profitable, they suck. Real bad. Okay? So every time I lose one vertical option, I'd have to win on 3 to break even. So it was just too much effort. Okay, more time. Yeah, when they're profitable, more money. But with more money comes more risk. Okay? I'm at the point in my life where I am perfectly happy with 1% every week. 10 or 15 minutes, 1%, awesome. Great. I walk away, it's 50% per year. My life has never been as good as it is now. It just hasn't. Okay? I'm very comfortable where I am. I have everything I need. My kids are far enough away where it's inconvenient for them to just stop by, but close enough to drive. You know what I mean? All right. That's why
I got a question.
Sure, go ahead, shoot.
So you're talking about 15 years ago when you were teaching that to your daughter. Well, 15 years ago you were not 62, which means your money has to be in a certain type of account to be able to have this as income strategic because there's a longer term you're looking at. I would think. I just want your opinion on that. Like we were talking about earlier, for 4.5 years from now, man, I'm in a position to now I can start taking from those accounts.
Okay, so I heard everything you said, but I'm not 100% clear on what the exact question is.
The question is the type of equities you're choosing. You know, you go, do you care on, is it energy? Is it consumer products? Is it, you know, is it Walmart? Is it this? Because remember, I can't take those profits. I can't take those premiums because I'm just compounding them. Do I want them to be a little bit safer than the ones that I could actually take this week?
Okay, so correct me if I'm wrong. You want to invest and you want it to compound for the next 5 or 10 years so that you can retire. Is that about correct?
No, so I'm 55. So
Yeah.
59 and a half is when I can dip into my IRAs, my Roths, whatever. So if I'm doing this strategy in those accounts that I cannot touch this week, but then I have a brokerage account that has a good sum of money that I'm living off of and doing your strategy, which is working great.
Okay, hold on. Hold on. So you have basically 2 or 3 accounts of what? Is that correct?
Correct.
One that you cannot touch until you're 59. One that you actually want to live off the interest on. That about right?
Totally.
Okay. Now, how are you holding that account? Is it in your personal name?
So
Wait a minute. The account you want to dip into, is that in your personal name?
So the brokerage account that I have now is about to be transferred into an LLC where I can do as a business where I'm trading over 700 trades a year. So that I'm not worried about that account. I'm talking about the other 4 IRAs and Roth IRAs that I cannot touch and you cannot treat as a business, but I still want to do what you're doing. So compounding that 1% for the next 5 years until I can finally touch them. What I'm thinking is I need to treat those accounts as a little bit more conservative or diversified, if you will, and not just, hey, I'm going to have Macy's, Walmart, have all these consumer products in the same, because heaven forbid the market does something in 4 years from now versus, you know, you and I potentially don't really care over the next week or 2 weeks or 5 weeks or whatever, because we can take those profits that we're earning on a regular brokerage account, if that makes sense.
Kinda. So I like the idea that you're taking the accounts you're going to play with, you play money, and you put it into an LLC. That's an awesome idea because you know the losses of your business can be offset by the profits of your trading. That's cool. Okay, and also the LLC can buy you a new car every year and use that to offset the profits. You know, people hate that. Like, how much taxes do you pay? Nothing. How do you do that? And whatnot. I don't isolate between consumer products, energy stocks, healthcare stock. I don't. Mine's strictly by the calendar. So whatever's coming up this week is what I'm looking at. I could care less if they're banking stocks or oil stocks or consumer products. I don't care. Is the company consistently profitable? Then it's on my list. If it's on my list, yeah, I'm going to buy it.
They're safe no matter what. You're looking at the same safe products, whether it's something you can make a profit on today or something you can make a profit on 5 years from now.
Exactly. Macy's has been around for what?
Yep. Awesome.
Okay, yeah. So Macy's has been around for over 100 years. Ford over 100 years. Harley Davidson over 100 years. Okay, so just because you're trading one account that you're dipping into, okay, well, 5 or 10 years from now, you're going to be trading the exact same stocks because a well-run company is going to still be here in 5 or 10 years, hypothetically speaking, of course. So as long as you have whatever trading strategy you use to best suit whatever goal you're trying to get, if you're trying to compound your Roth and your other accounts, well, you're using the same stocks. Does that make sense?
Totally. And I'm using it now. I just didn't know if I needed to adapt or change some things. But yeah, for the most part, I'm doing the exact same in the brokerage account that's going to turn into the LLC account as opposed to my other accounts that I cannot touch, that I will be able to touch because my wife is, 3 years older than me. And when she turns 59 and a half, then it's game on. Now I have more accounts I can
Okay,
withdraw from.
you want to hear something crazy?
I do.
Okay, so let's say hypothetically speaking, you know what an IUL is? From your IRAs, okay? Put that into an IUL, right? 30 days later, you can borrow money from your IUL, pay back your IRA. Now your IUL is getting 8 to 10% a year, tax-free, uninterrupted. And then you paid back your IRA. So your IRA is still gaining money, your IUL is gaining money, and the IUL is a tax write-off for the business because you are a key owner of the business. And without you, it wouldn't actually work. So you're gaining money here, you're gaining money here, you get a tax write-off here. It's a nice little spider web. If
It sounds like a nightmare.
it sounds like a nightmare all bundled up in one time, one chunk. But if you separate it, one step at a time. It's like, how do you eat an elephant? One bite at a time. How do you set up your financial empire so you pay no taxes and you get all this money tax-free? One step at a time.
Yeah, well, I think the problem, and I'll be quick here, the problem, like with Schwab, you need $250,000 in all of your accounts, because again, a brokerage account, you can't have IRAs, Roths, those don't count. So, but you can, whether it's 5,000 or 500,000, the 250's got to cross all accounts, which is fine, and then of course they got to approve you for that account, but
To a certain point. I mean, for most people, it's hard to get to 100 grand. Okay, once you get to 100 grand, well, 152.
yeah.
But anyway, yeah. Yeah, but when you're there, a tax strategist will really help you.
Oh, already hired one. I'm golden.
Awesome. Hey, you know what? If you could, put the name of the tax strategist in either the group chat or the morning chat or the, what do you call that?
Definitely.
What do you call that other thing? The Discord.
I'll tell everybody tomorrow morning.
Doesn't do it anymore.
Awesome. Okay, thank you.
You got it. All right, so let's get back. Where were we? Okay, Ryan, because vertical spreads work almost the same as covered call, what's the difference? Huge difference. Buy the stock. You own that stock until you decide to sell it. You can own that for 15, 20, 30, 40, 50, 60 years. An option, vertical spread, they expire. They do. So an option every single time you want to do it. And that option does expire. And if you're wrong, which 80% of all options expire worthless, if you're wrong, it's going to take you 2, 3, maybe 4 vertical spreads that are profitable to make up with the one you miss. Okay, so yeah, I used to do them because they're awesome. Because if you do them right, stock goes up, you make money. Stock stays the same, you make money. Stock goes down, you make money. Okay, if it goes up, great. Goes nowhere, great. If it goes down a little bit, great. But what happens when it goes down a little bit too much? Then you lose both positions. Yeah, I used to do them years ago. They used to be great. They used to be profitable until they stopped being profitable. Okay, that's all the questions there. Okay, we got like 15 minutes left, so I want to get to these questions as I can. MBM, hope you're happy with that answer. What dimension are a day? I didn't say $10 a day. I said $10 a week. Yes, but it has to be in something to compound. Exactly. What's a hedge fund? Uh-oh. Okay, Tiny Coco, a hedge fund is where you get a lot of rich people throwing their money into it, and somebody like me trades it for them and takes a percentage of the gains. Okay, so there are a lot of people out there say, hey, take my money, trade it for. Got a lot of questions over here. Luke, interesting. Dude smacked. Okay, thank you. $10 a week. Sorry, yep. Rule number 1, buy high, sell low. Okay, post, come on. Hello, sir. What do you trade? Nope, no crypto, no Forex. Yeah, but you could lose out on price increases. Okay, plop, plippity, plop. Okay, whatever. Okay, I said right from the beginning, I'm not looking for capital appreciation. I'm not concerned if the stock goes up. It's not what I'm looking for. I'm looking for specifically cash flow. Okay, there's three types of stocks that were available to us. One, private companies. Well, you really can't, far and few between. Okay, the other two. One is a dividend stock, also known as a income stock, and the other one is a growth stock, also known as a something accumulation. So the stocks go up in value faster. So you take the profits on a growth stock, they take all the lift. When you retire, you are going to need money to pay your bills. Where are you going to get it from? So my money's got to come from somewhere. Now, I could go back to work. I have no desire to do that. All right? So the money that I have earned in my working days, now my first job was in 1973, Old Man Simmons Farm. Okay, picked tomatoes, picked green beans, planted corn, did watermelon, blue Hubbard squash, corn on the cob. We even did firewood. But anyway, besides the point. All the money I've accumulated over my life has to give me a rate of return on an annual basis in order to pay. A solid strategy for your main investments. Thank you, Charles. If you could only buy one dividend stock, would it be and why? 14 cents. Thank you. I don't have an answer for that one. If it was only one stock, what would it be? At this moment, it would probably have to be Macy's because it's so predictable and it's been so good to me for the last 3 years. It's quite nice for a dividend. Okay, never heard of it. What controls the stocks to go up or down in such a small increments? Buyers and sellers. We are the buyers. We are the sellers. Okay, whatever the stock is offered at is what the movement is. Okay, big dollar stocks have big dollar moves. Small dollar stocks have small dollar moves. It's just percentages. Okay. Doug, welcome. Luke. Okay. Could you also look at MSA? Never heard of it. Okay. Good evening. Thank you, Jimmy. I think I'll live better knowing that. All these finance peoples are scammers. Thank you. If you could predictably trade successfully, you wouldn't be on YouTube trying to get money from viewers. Because see, now I'm a little offended. Because not once have you ever heard me say, I'm selling something. I want you to buy something. You're making assumptions and you're totally wrong. Okay? I'm not here selling anything to anybody. I'm here passing along information for free. I'm creating a video log for my children and my grandchildren. So when I am gone 10, 15, 20, 30 years from now, they will have something to look back at and say, how do you do this? Stock market's been around for 400 years. When I'm gone in 30 years, okay, my children, grandchildren, great-grandchildren will still be able to watch these videos. Now, I showed a video a little while ago of me 15 years ago. Well, in 15 years, I'll show you videos of me 30 years ago. Okay, it's all the same. Great strategy. Thanks, Luke. I got stuck in CRCL. We are down. Okay, sorry, dude. That's not a company I would buy. Have you ever tried the strategy in the bear market? Okay, you think that we haven't had a bear market in the last 15 years? Well, of course we have. Okay, stocks have been around for over 400 years. Okay, you buy a stock, you collect a dividend. Now the funny thing, okay, a lot of people get some kind of misconception of this. Okay, you got a company like, let's say, GPC, Genuine Parts Corporation. This company has increased its profits. Let me get this right. 7 decades. Now, you honestly cannot look me in the eye and tell me we have not had a bear market in the last 70 years. Okay? There's a whole bunch of companies that have been in business for over 100 years. Coca-Cola, Pepsi, General Motors, AT&T, Wells Fargo, Bank of America, Ford, Home Depot, Lowe's. I can go on and on and on. These companies have consistently increased their profits for more than 5 decades. So 5 decades, yeah, we've had plenty of recessions, corrections, what the heck is this thing? It's not working. Pullback, whatever you want to call it. So yeah, it works in a bear market just as well as it works in a bull market. Okay, just a little different approach. Covered calls are perfect in a bear market. Absolutely, Bodie. All right, what else we got? I got Netflix yesterday, $2, but $1,200, and like, okay, fine. All right. Bodie. All right. Does he talk about the best way to enter a stock? It is easy to not worry about covered calls when you have owned the stock for 10 plus years and the cost basis is fractional on the cover. Oh, no, Bodie. You're under the impression that I've held these stocks for years. No. The longest I've ever held anything is 1 year. That was Kohl's. Because Kohl's kept giving me 1 to 2% every single week. Most of the stocks I've owned for less than 30 days. Some of them less than a week or two. Okay, say no, I don't. Yeah. Bitto WBA. No, I don't do Bitto. WBA no longer. MRO. Marathon? MRO? Lowe's, Bitto WBA. Okay. Consistent profitability, sure. Credit Suisse was a very consistent and profitable bank until the very day it was bought by UBS. Like it stopped existing. What's your opinion on such bonds? Wait a minute. You went from one conversation to another. Thanks for the knowledge. You're welcome. Rod, is it okay to invest long-term in dividend stocks? Well, you can do whatever you want. Okay? Now, you can do whatever you want. Okay? This is what I've been doing for the past 15 years. It works for me. Okay? I come from the age group called the Gen Xers. Okay? We got a belief that if it ain't broke, don't fix it. Be sitting there trying to figure out new stuff. Okay, fine, great. Now it's going to have more time, more money, more energy. Yeah, no thank you. I'm perfectly okay. All right? You're welcome, A-Rod. So, let's go see what kind of questions we missed over here and take an overview of your program. Oh, sure. You ready? I'm investing in dividend stocks for weekly cash flow using nothing but pre-qualified dividend stocks. Those are companies that have consistently increased their profits for at least 20 consecutive years. Now, I buy them just before the EX dividend date, because just before that was 30 seconds. Can you lose on a covered call? Absolutely. The way most people lose on covered calls. Are you ready for cost? S&P? No, I don't do the S&P 500 index fund. Nope, sorry. I do. Any opinion, any options on your mind? Yeah, a whole bunch of them. I don't know quite what you understand. All right. Color. Do you ever get 52% ROI in a week? No. Richard, how you doing? What's the stock? The stock right there is Macy's. I have chicken stocks. Okay, whatever. All right. Do you consider open interest? Nope, not at all. What is the symbol of stock? M. Which stock? M. Macy's. Where do you find the list? Eagle 18. You were on the other channel, dude. I already answered that question. 86. Good evening. Do you own those stocks for covered calls, or do you use leaps? Very rarely will I use leaps. Okay, because they expire also, and you need to get a certain amount every single week to cover the the time decay, the theta decay. Okay, so as the time, here you go, you ready? As the sand goes through the hourglass, so does the value of our leaps. The value of a leap decreases every single day. So you buy it, fine. I have 2 of them at the moment, using it as an example only. Can I access your computing course on your website? Absolutely, dog. What is this $3 stock? 86. That was Riley. Riley. Thank you, Laurie. Stevie, what's happening? Okay, dog, I already talked to you that. Alibaba. Alibaba only has 2 years of dividends. So I don't really do Alibaba. Haven't been here in forever. Aaron, wow, haven't seen you in a while. Can I access? Okay, dog, you asked me that question 3 times. Knows his stuff. Been here for an hour. Thank you. We got 4 minutes. I'm going to see how many of these questions I can go through. Florida, Georgia, cross country. Thank you for that. Thank you. Black Acre Esquire. Paper trading here. Bought 100 target. How do I choose the strike price? More than likely you choose the exact same price you paid for it. So if you paid, what's target? TGT. If you paid $103.85 for target, see, 103.85, I'd do the 104s. It's the closest strike price to it. That's me personally. I can't tell you what to do, but that's what I would do. 86 Esquire Blue. No, it's the same strike price. This is 1%. Yep. 1.7. Okay. Where are we? Best dividend stock. I'd have to say Macy's at this time. What are your best dividend stocks? Those would be the dividend kings. Day trading is dangerous. Odom, yeah, absolutely. Gonzalez, Gorias. Why would you not do a poor man's covered call over the traditional? Well, because the option expires. Okay, to do a poor man's covered call, you have to buy a LEAP, which is a long equities advanced participation fund, whatever you call it. It's an option way out in the distance. So let's say hypothetically the 20th of March. Okay, so I take a look at Target, and I buy 20 March, which is way down here. 20 March right there, 262 days away. I could buy it 104. I could buy the 105, so it's cost me $12.90. Well, that $12.90 every single week is slowly going to decay to zero. If I buy the stock, yeah, it's going to cost me 103, but I will own it until the day I die or the day I sell it. Okay? So, although a lot of people like doing the poor man's covered call, which can be very profitable. Okay, I just answered that question. He considers other data 50 profitable companies. Okay. Year, UPS, love UPS. Ray, trading off moving averages, okay? It all depends on what you want to do. Ray, if it works for you, great. I trade off of momentum. Okay? Get profit taking. Profit taking, you cannot deny profit taking. If the stock jumps up 10, 15, 20%, you're going to have guys like me and some of the guys in the audience. Like if it goes up 5, 10, 15%, I'm going to take my profits. And then the stock drops. If enough people take profits, stocks drop. And it gets down to a certain point, 90? Oh, stock's never been at 90. Let me buy some. So we buy some and then the stock goes back up again. Ray, 10, 20, 50, 20. I have no idea what that means. Vimy, can you give examples of stocks you trade for options? Macy's, Target, Ford, General Motors, IBM, AT&T, Home Depot, Lowe's, Foot Locker, IBM, Southern Company. I could go on. There's about 300 of them. Keep on keeping. Now, where was I? MRK. All these questions. Club Med Tom. I don't see a question at Club Med Tom. I see you saying please, but could you share the strategist with us as well? Oh, he's going to give me the name. Probably won't get it till tomorrow. How long do you hold shares for each play ideally? 5 days. Monday, jump in. Friday, get out. Strategist name would be great. Yes, it would be. Okay, I don't have it either. How are you constantly getting 52% per year if Warren Buffett only averages 20? Warren Buffett has a different trading strategy than I do. Yeah, Tom, I know it's challenging to find a strategist. Do you ever use stop loss? No. Never, ever, ever, ever have I ever used a stop loss. Okay? Stop loss, in my humble opinion. This is just my humble opinion. Those are people who don't really trust their own decisions. Okay? Rule number one, for me, never buy something you don't understand. When I mean understand, it's like you need to understand everything about it. What's the high of the year? 170. What's the low of the year? 90. That is almost a 46% drop. 46% drop. If you're not okay with a 46% drop in a company that you like, don't buy it. Because you should know everything about a company and be okay with everything about the company before you buy anything. Now, I don't mind buying Target. I don't mind that the high was 170 and the low is 90. Because I'm not holding it for a long period of time. I'm holding for 5, maybe 10, 15 days. That's it. Because as the stocks go up, well, here we go. Let's zoom into this for a second. Okay? See? Down, up, down, up, down, up, down, up. Okay? So when I'm looking at a stock such as Target, okay, I buy it when it's low, not the bottom. I don't buy bottoms because you hit the bottom 2 days up, then I jump in on the third day. Go up, I make my 1 or 2%, I jump out. I use a covered call. Does it work? Great. And then I move it into the next week. And then I move it into the next week. And then I get rid of it. I don't want to hold on to anything for a long period of time because they go up and then they go down. And then they go up and then they go down. If you find a good stock, just follow it. When it's down, that's when you should buy it. When it goes up, that's when you should sell. You have to figure out what is the right entry and what is the right exit for you. Do I use EMAs? No, I do not. I'm just starting day trading. Yeah, good luck with that one, kiddo. I don't do day trading. I tried that years ago. No, thank you. All right. What you do if the stock goes down? You still hold a stock for more than 5 days? Absolutely. Because that's what stocks do. They go up and then they go down. When the stock goes down, I lower my strike price because I want a cash flow. Whatever the strike price drops to. If I buy it at 102 and then it drops down at 92, well, I'm going to be selling the 95s and 96s until it comes back up again. Wouldn't you make more just adjusting your stop limits? Absolutely. I don't use stop limits. And if I could make a lot more. Okay, see, you're misunderstanding what I'm doing. I could make a lot of money sitting at home in front of the computer doing this all day. I could. I have no desire. I want to make 1%. That's it. Make my 1%, I'm done for the week. That's it. Why is it that people don't understand that? Okay, at some point in your life, money no longer has the driving force that you guys have. When you're retired, okay, I know exactly what my payments are, my mortgage payments, my gas, my food, my shelter, my clothing. I know what all of those are. Well, I'm making X amount, which is more than I need. Why? I can't take it with me when I go. I've never, ever. So here in the chat, I'm going to give $100 to the very first person who can tell me when is the last time you've seen a hearse with a U-Haul. Anyone in the chat want $100? Tell me when you got a picture of a hearse with a U-Haul. Seriously, when you go, you're not taking it with you. So why would I waste my time sitting in front of the computer trying to get a few dollars here, a few dollars there? Look, okay, where are we? All right, Pete. 1%. Whether I invest $100,000 and I make 1%, it's irrelevant. 1% is 1%. And 1% every single week is 50% a year or more. Okay, so if I'm starting out with $100, at the end of the year I'll have 150. If I'm starting out with 20,000, at the end of the year I'll have 30,000. Okay? 1% is 1% no matter how you look at it. It's past 11 o'clock. I am done. How did you lose money 3 times this year? Not paying attention, and I hit the wrong button. All right? So we're done for tonight. I'll catch you guys in the morning over here on Zoom. And you guys over here, have a great night. We'll see you later. And now the end is here. And so I face the final curtain. He went full port. I have no idea what that means. My friends, I'll say it clear. I'll state my case, for which I'm certain. I've lived a life that's full.